Good morning this Tuesday, the 20th of June. I'm Grady Wool for Market Analysts with Bell Direct. The local market started the new trading week 0.6% higher, carrying the ASX rally into a sixth straight session, driven by a rally for healthcare stocks, namely CSL, as investors took last week's update-driven sell-off as an opportunity to buy into Australia's largest biotech company on Monday. PointsBet jumped 21% on Monday after updating the market on its non-binding indicative proposal from DraftKings to acquire PointsBet's North American business for a headline purchase of $195 million on a debt-free and cash-free basis. Yesterday's announcement saw the PointsBet's board share that DraftKings' offer could be reasonably expected to lead to a superior proposal, which would further boost the PBH share price, especially as Fanatics Betting is also in the race to acquire the online betting company's North American business. The board continues to recommend that shareholders vote in favour of the FBG transaction at the extraordinary general meeting scheduled for Friday 30th of June, while it considers the DraftKings proposal. On the mining front, Lake Resources tanked 16% on Monday after releasing a two-phase development plan to target a production of 50,000 tonnes per annum of battery-grade lithium carbonate at its Cachi project in Argentina. The update outlines significantly higher capital costs, a 3-year delay to the expected production date commencement at the mine, and a 50% reduction to the target amount of tonnes per annum of lithium from the project. The market responded negatively due to the higher cost incurred for the phased approach between $1.1 billion and $1.5 billion for Phase 1, which is significantly higher than the pre-feasibility study for 25,500 tonnes per annum with capex of $544 million and the new target being 50,000, being half of the previous target of 100,000 tonnes per annum. Wall Street was closed overnight for the Juneteenth National Independence Day holiday. However, all eyes in the US will be on Fed Chair Jerome Powell's testimony on Thursday night, Australian time, to determine what the rate hike movements look like for the coming months. The Nasdaq was the winning index last week, gaining 3.3% as investor appetite for technology stocks continues to grow amid the hype around AI and its ability to drive hyper operational efficiency across many industries. Over in Europe, equities fell on Monday as investors' concerns over weakened demand recovery from China weighed on resources companies in the region, and healthcare stocks took a hit on dampened corporate forecasts. The Stoxx 600 fell 1% on Monday, with all sectors ending the day in the red, while Germany's DAX lost almost 1%. The French CAC closed 1.01% lower, and in the UK, the FTSE 100 fell 0.71%. Investors are also looking ahead in the region to the Bank of England's rate hike decision out on Thursday, alongside that of the Swiss National Bank. On the commodities front this morning, oil is trading 0.8% lower at $71.21 a barrel. Coal is down 5.52% at $128.45 a tonne. Gold is down 0.4% at $1,949 an ounce, and iron ore is up 0.43% at $117 a tonne. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open Thursday's session 0.15% higher, extending the local green run into a 7th straight session. Stocks trading ex-dividend today include Premier Investments. If you've been thinking about this stock, it might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. One Aussie dollar is buying 68 US cents, 97.2 Japanese yen, 53.75 British pence, and 1 New Zealand dollar and 10 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has initiated coverage of Matrix Composites and Engineering with a hold rating and a price target of 35 cents, noting the near-term earnings and free cash flow outlook is leveraged to increases in global offshore energy development activity, which Bell Potter estimates is currently at a 5-year high, resulting in an uplift in outstanding product orders to be delivered in the second half of FY23 and FY24. And Bell Potter has downgraded the price target on Bega cheese from $4.10 to $4 and maintain a buy rating on the dairy company amid forecasts for movements in the cash rates, implied yield curves and impact of the strengthened Aussie dollar to US dollar on AUD commodity returns. Farmgate pricing has again been competitive, and while we saw this as manageable at the open, the rapid appreciation in the AUD has created a headwind which would appear unrecoverable in the absence of higher US dollars commodity prices or further price increases in the branded portfolio. And that's all we have time for this morning. Have a fantastic Tuesday and happy investing.